What's going on, everybody? Chris Franks with Texas West Capital. I got the boys Tillman and Andrew from Arch Public sitting in the wings, just waiting, just gnawing at the bit. Can't wait to get in here and say something that'll make you smile, and then say something that'll piss you off. And you know, at the end of the day, we're just here to get your emotions out there. Not really. But hey, listen, we're going to talk about Bitcoin. What else is new, right? And we're going to talk about his Saylor right to say, hey, hold. That's what he posted this morning amidst what's been going on with Bitcoin. And of course, Andrew's got his special information, his secret sauce from his little contacts over there in the TradFi world. And Tillman, I'm sure, has an analogy or 15 that he will put with us today. So y'all are in great hands here. As always, hit the thumbs, hit the thumbs, the likes, leave a comment. Do me a favor, do us a favor, share this so we can get this out here. And I think, by the way, they'll have to correct me if I'm wrong here in a minute, but I believe your opportunity to enter their drawing for the passes there for the Bitcoin conference, I think, is over. I think it ended yesterday, but they'll clarify that here today. So, man, oh man, I guess without further ado, let's bring them on here. What do we got? We got Tillman, we got Andrew, and this is not the way it works. Let's do it like this. There we go.
The drawing ends at 5 p.m. tonight, Eastern. 5
All right,
p.m.
so you guys still have time.
You still have time.
Let them know what they have to do that again.
Huh?
Let them know what they have to do.
They have to download our Bitcoin algorithm for free, and they have to follow at @TryArchPublic. And we will be handing out winners tonight.
There you go, guys. So, hey, take a chance, get it in there. And these are for, what is it, 2 industry passes?
2 industry passes. That's right. It's the whole 3 days at the Bitcoin conference. Arch Public is going to be a significant sponsor at the Bitcoin conference this year. We have taken over with Gemini the entire whale experience. The Whale Lounge, the Whale Stage, the entire Deep, the entire VIP experience. You're going to see Arch Public everywhere. So, yeah, excited to do it. And we're going to be rolling deep.
It's going to be in Vegas, baby. We're back.
Baby.
Nice. Love to hear it, guys. And by the way, go ahead.
Wait a minute. I do have another piece of information associated with Vegas. I do believe that in the world of beards and Bitcoin, another asset comes up periodically. And Tillman Holloway is going to be a featured speaker at the XRP conference in Vegas. That's the day after the Bitcoin conference. I wanted to put that out there.
I don't think that's official yet, Andrew. You should be.
This is really happening. Oh, Lord have mercy. And listen, guys, real quick here. My anthology series, my new book, Fork Nations, Volume 1, Consensus Broken. I think it'll finally be released here in the next 2 days. So jump over to forkednations.com and sign up so you can get notified when it gets released there. Basically looking at Bitcoin not from what what y'all normally look at here, which is price and whatnot. Actually, what it is it's a lot more based on what Major Lowry said in his book Software. And so looking at Bitcoin as a weapon, how they can weaponize
this is how can you be serious and talk about anything with that stupid hat, Andrew?
I need to get my stuff out too, gentlemen. This is my
dystopian hat. When you go to your book that's about wars and Bitcoin stuff,
he's got the scrolling thing at the bottom of the screen. Okay? He's got the Fork Nations.
Bitcoin fiction that doesn't there's a lot going on with that rolling thing that if you look at it the wrong way, there's some different verbiage that I'm seeing. You know what I'm saying?
See, this is what happens, guys. I'm really great, and I push this out there that you need to sign up and take a chance with them and whatever. And I put on my thing, and they're like just totally destroying me.
How much is the book, Chris? How much is the book?
Huh?
How much is the book?
I think I have to check with the publisher. We had the issue with the publisher this week, which is why it didn't go live this weekend. But I think it's going to be for the ebook. I think it's going to be like $17.99.
Well,
So
Arch Public will buy the first 10 copies. How about that? As long as
You're
they're signed by you. We'll give them to every one of our closest and dearest friends.
The
and
first
they'll
10
be-
copies have to be signed by him and his lawnmower guy. Because
And the lawnmower guy?
they appear here on the show every time. We want both.
Well, that's a team of mowers, right? It's a team
I'm
of
sure it
lawnmen.
is. I'm certain it is.
Everybody's
I don't know
got
if
a
that
sign
team has gotten bigger or smaller in this administration, but that's a different conversation. You know what I mean?
Coming from a guy who
know.
glues his mulch to his beds.
Oh, listen, don't get me started. I wake up every day and I look at my lawn and my mulch. I'm like, man, I have arrived in life.
Yeah, your Twitter account's gotten real boring since you've got this lawn obsession. I can say that.
Yeah,
Nobody wants to see
a lot
that.
of reposting, not very much of him saying much anymore. I know, right? What's going on with that?
Hey, listen. I have another hat, so just be warned. I have 3 hats here today. They're for different things. When we go to dystopia and the Fork Nations, this hat comes out. When we get to some theories that Tillman puts out there, there's another hat that's just cuckoo. Okay,
listen,
there's another hat.
Even Tiger Woods couldn't stay on top forever, so it's
That's
just
true.
Wow.
it's part.
That's true.
It's
Did you just bring that up because of his recent post?
No, I'm just saying, even the best, even the guy who runs the show has to eventually reconcile his age, and the beanie it's past his age demographic. He can't.
It's got a look to it. It's
with the sweatshirt, with the hoodie.
I really commit to it. I mean, what's that? You want to talk about commitment, baby?
Hey, man, if you had a few sleeves of tattoos, we might think he was a bike builder or something.
Yeah, listen, I already thought he was in the movie 300 based upon the profile pic he has on his Twitter handle. So I mean, he's a mean dude over there with the
that's true, because my ab is very much like the 300 ab. Right? Now, I only have one, but it still
one ab just does the work of the other 5, right?
It's just one.
Y'all are wasting so much of my time today. Can you get to some interesting
Bitcoin
commentary?
Dogging on me right away, and they started dogging on him about his hat. What you talk about y'all here?
Well, you're shilling books. He's pulling his hoodie down. I mean,
I was shilling your company first thing. You seem to be forgetting that, huh? All right. So
well,
anyway.
Apologies. I did forget that. That was good. Keep shilling.
So anyway, guys, as you can see, we're not dying here. Bitcoin doing its thing. We're still all right. We're still alive. We're still, not even just hopeful about the future, but really kind of, I would say looking forward to what's coming, right? I mean, we've had a lot of stuff going on. The big talk, obviously, for a while now has been the tariffs. There's a lot of back and forth about that, and oh my God, it's what's causing things to happen. The tariff news really is just knee-jerk reactionary, guys. Trends are established, and then you get the news, and the news happens.
The tariffs are an intelligence test. How quick? I think the tariffs are an intelligence test. It's like, does your leadership really want what's best for your nation? And if it does, then through the tariffs are being brought to the negotiation table. And your character when you arrive and the way in which you respond is on full display for everybody. Whether you respond in this I hate Trump mentality first, those are your true colors. If you cannot get past your differences with Trump in order to make, your nation stronger, then you shouldn't be in office to begin with. I think this is a big trap, and it's going to, order from chaos is how it's always done. It always will be done that way. And the chaos that we have right now, there will be order that comes out of it. And I think it's going to return us to higher heights. And it's going to be the impetus that's going to really solidify, America first going forward. But this is just a big negotiation tactic that's all about our debt, all about the interest rates that we have to drive down, and we have to refinance our debt at those lower interest rates. And it's all about having a reason to print more money. We're about to the Republicans are about to pass a $5 trillion debt ceiling increase.
Yeah.
The Republicans are. So, like, it's always about printing more money. That's what it always
Absolutely.
has been about.
Yeah.
And what does that mean? Asset prices go up. Tariffs, what does that mean? Asset prices go up. It's just inevitable. Just wait is the point. Just wait and try to not buy stupid stuff along in the meantime. That's basically all you have to do right now.
One thing that I find interesting is supposedly smart folks in the world of TradFi and then crypto Twitter as well, talking about interest rates going down. Well, now they're back up, so it's not working, and this is what you wanted to, the administration wanted to happen, with no conversation whatsoever associated with the carry trade and the trade associated with treasuries and futures, right? And that's the trade that's unwinding, and why we've seen a small spike in treasuries. The fact that nobody mentions that when they talk about, oops, interest rates went back up over a 48-hour period, and they're not discussing the fact that that is a hedge fund trade that's unwinding right now.
That's called covering your position.
Yeah,
right?
that they have to unwind. They absolutely have to unwind. So anybody that's posting like that about interest rates going back up, and there's some smart people, by the way. Joe Wiesenthal of Bloomberg, has been on top of this for the last few days, but for some reason he isn't mentioning the unwinding trade. That's a huge trade at hedge funds. And by the way, because that spread is so tiny and so tight, what do they do to squeeze out more performance? They use leverage, right? They use significant leverage. So when you unwind that trade and unwind that leverage, you're going to get some big movements in the 10-year treasury. So that's what's happening in the last, let's call it week of interest rates. That's what's happening. It has nothing to do with, is what they're trying to do to move rates lower working. That's not what it is at all. That takes significantly more time. It's simply a trade unwinding. And whenever you talk about, oops, rates went up instead of going down like Trump wanted them to, and you don't talk about that trade and the unwinding of it, you're just not smart.
Well, listen, just call it what it is. It's a dead cat bounce. It's literally, it's a recovery after a plummet. Like, you got to acknowledge the initial move is the point.
Yeah. I mean, that's the whole thing, right? We've watched that move come down from, like, was it 4.95, almost 5? That was a pretty harsh move down. I mean, you're going to get this bounce, right? And the thing is, what Andrew's saying is exactly what we should be paying attention to, but it doesn't make for good headlines. Right. Let's face it. What is the business of media? Media is not in the business to tell you truths and whatever. They're in the business to get you to watch them.
Yeah, but the truth is so potent and so powerful. Like, I'm not a real estate guy, right? I don't have that bone in my body. I don't know how to. Too much on the boots on the ground work for me. But if I'm in the real estate business right now, I'm getting ahead of this. This is great. I'm getting all my ducks in a row, because there's going to be a time where I'm going to be able to close a loan with very little capital, with a huge number of leverage on the back of it, aimed towards real estate, and it's coming. It's right there in that 6-month window. It's not here yet, but baby, if I was a real estate guy, I'd be lining up everything I could right now to get ready to pounce, because the amount of money that's about to get printed into the economy, $5 trillion extra dollars, real estate's not going to absorb some of that. I mean, come on, this is like shooting fish in a barrel.
Well, and that's the thing, right? Because when they do actually print the money, I mean, the reality of it is there's going to be excess. There's always excess when they print. And that's the key. The excess is what you're interested in, because that excess it doesn't just sit there. People don't just, the companies, the big hedge funds, things like that, they don't just let money sit there usually. They're looking for some place to put it, because we all know that inflation is always and forever constant, right? We know that the value of your dollar is going to consistently, over time is going to consistently drop. So if you have access to a lot of that cash, you don't usually just let it sit there. Now, sometimes it happens, but usually it isn't what it is. And that's why we get this, when you have this printing of money, when you have this liquidity increase, when you have interest rates drop, all this, produces more cash out there, and that cash has to go somewhere. And usually where it goes is things like the stock market, things like Bitcoin, things like, hell, even your damn shit coins, your altcoins that you guys, get into out there and get rugged on.
Yeah. Hey, I love trying to explain to my accountant when I send her screenshots of pump.fun how to book those losses. Those losses are really hard to prove. I'll say that.
All right.
Yeah, when he has conversations with the accountant about Fartcoin, that's part of the lexicon of finance.
It's so embarrassing. It's like
lexicon of finance these days. It is what it is. I mean, heck, the market on Monday acted like Fartcoin a little bit. It went up to however many trillions, then back down trillions inside of 10 minutes.
Well, extraordinary to watch. It's crazy. If you had any leverage on either side, you've been wiped out. Like, it's just been a coming to Jesus type event for everybody that is playing the game with any type of a leverage, because it was cutting both ways so hard. Everybody's bleeding.
Well, and not even just there. I mean, even with the stocks, we were trading. Over the Academy, we were trading live there Monday morning, and holy crap, we're trading the 1 minute time frame, and you're seeing the S&P jumping like 200 points in a matter of minutes, like just a few minutes, and you're like, we ended up doing well, but damn, you got to be much more careful if you're out there trading and you've got a lot of volatility like that, and if you're employing that volume, like Tillman's saying, you're going to get wiped on something like that because the moves are so hard and so quick.
Well, most brokerage houses have, for all intents and purposes, gone to 100% margin during this, sort of moment of volatility. You can't trade with any meaningful amount of margin, because if the chances that you get liquidated and your position gets wiped out inside of 40 seconds. And by the way, making a decision, then going to the keys and then punching in that decision, then click enter takes about 40 seconds. So yeah, there's we know our relationship with TradeStation. I mean, I don't think they've put back on meaningful margin capabilities in the last week or so. It's been 100%.
Yeah, I mean, they can't.
Yeah.
Well, they're covering the liability there, and they don't want to cover that. Who wants to have that bag?
Mm-hmm.
Yeah, exactly. The traders want to get in there, and they think they want to do it, but for a company that's actually facilitating that, it's not exactly great for business. So,
I would make I think the volume is just pathetic in most of the markets that I'm watching. I mean, it's not high volume that are making these moves. It's really low volume. And if you look at casinos, they have struggled. I don't know if you guys have seen the headlines about how just a lot of people have stopped going to casinos. And if you look at like Wall Street and the futures market, there are some markets that are so thinly traded these days, they're almost dead. I mean, it's almost doesn't exist, or if it exists just because it always has, but not because it's actively being used by any material traders. I think crypto has the potential to revive the trading aspect of the markets, and I think that's why Larry Fink and all these guys have really taken notice, because it's bringing new bodies in the door, and I think that you're going to see more wild swings in traditional markets, because I think the volume's drying up. I don't think there's a lot of people jumping in to quote value buy. I think there's sexier vehicles out there. There's better vehicles. If you're going to play volatility, right? If you want to be subject to the swings that we're being, subjected to in the traditional markets, why wouldn't you play Bitcoin? Like, it's a much more volatile, much better. It's much easier to predict. The volatility isn't anomalies. It's built into its DNA versus, how do you predict? We did some regression analysis. The last 25 years of market data. there's been 4 swings of more than 1,000 points over the weekend or in after hours in the last 12 months in the NASDAQ.
Which is
Never
crazy.
happened in the last 25 years before that. So I
Yeah.
mean, like,
What's really interesting to me is that when volumes are at their lowest, so overnight there have been the biggest swings in the futures markets over the last week or so, right? So you had on Sunday, you had futures open up and they just gapped wildly lower, and then you look where we're at 12:25 on Wednesday. We've effectively not moved much at all since Friday, really at all. So you had, again, on Twitter, you had, all caps, futures gap down 4.5%, now 5.5% when they open on Sunday. Black Monday is coming.
Oh, yeah.
All this stuff is going to happen. And we were down 1 and a few percent, 1 point whatever yesterday, and we're up 1 point whatever today. On Monday, we're basically flat. So all the ranting and raving and gnashing of teeth and nothing. There's basically nothing.
Yeah, I noticed that as well. I was watching that on the weekend, especially when Bitcoin. I mean, there was already talking about it for stocks and whatever. And the minute people started talking about on Friday that we're gonna have a Black Monday, I was like, man, y'all are way too emotional about this.
Yeah.
I'm like, maybe we don't get August 5th again, which was everybody thought it was the yen carry trade unwind there. But I'm like, we should at least be getting some sort of bounce off Monday, because Thursday and Friday sold off so hard. And then when Bitcoin sold off on Sunday, everybody about lose their damn mind. It was everywhere. Black Monday coming. And what happened? It didn't.
Nothing happened. And oh, by the way, again, now we're talking to some degree about media narratives, because in 2022, the S&P was down 20% and the NASDAQ went down 30% in 2022. Where was the panic? What had There wasn't the world's coming to an end. Everybody that I talk to that owns a small business is going to cease to exist. Oh, they can't do business. They're worried. They're concerned. They're afraid. None of that narrative happened. Why? Because we were in a different administration and we had different, the media treated that administration and whatever happened in the world around it very, very differently. Now we're down 10, 15%, and quite literally hell is coming. Like that's the reality. And the truth of the matter is, between Friday and today, we're even Steven.
I think we've lost as a nation the understanding of what it is to be respected as a country. And I think there's this delusion that being respected is the same thing as being liked. And being liked isn't the same thing as being respected. When you're dealing with a zero-sum game and whoever negotiates better at that table takes home more of the prize, when you're in that type of a situation, it's not about being liked. It's not about rolling over and taking the submissive stance. It's about being respected in your ability to defend why you're owed the delta, why you're owed more. And if you have the ability to articulate that, and you have the ability to stand on solid ground rooted in logic to say, listen, there's a trade deficit. There needs to be a change. We're going to initiate the change. We understand it's uncomfortable for you because you've been on the winning side. Time to shift. Yeah, for so long. Like, people don't even understand that logic anymore. And so I think, honestly, I don't think it's 3D chess. I think it's just back to the basics of negotiating, which is like, when you show up at the table, you have to be respected. And if they know that you roll over every time and just cut checks, you're not respected. Look at that at an individual level. If you go to some of where I was raised in Houston, there's some very wealthy families, oil money families, where the kids never hear no, and when they go get a check, they get the check every single time. And guess what? They're not the type of people that you really want to be around that much. It's they've been spoiled rotten their entire life. They don't even understand the value of the access to that, right? And so I think we have, as a nation, this kind of steep hill to climb. Trump's chosen to do it in a very short period of time, which causes a lot of angst, of uncertainty. But it also forces people's hands that are on the weaker side of the table to act faster to fix it, which means they got to come to the negotiating table. And so I think the bounce that we're going to see when all this starts to get sorted out is going to make this blip feel, we're going to forget about it, and we're going to be kicking ourselves that we didn't buy on the dip.
Well, the really NASDAQ was at 15.5 at 3 o'clock. No, it's at 15.6 at 3 o'clock on Friday, and it's at, for all intents and purposes, 15.5 right now.
Yeah.
That's
After all the hubbub and all the fear mongering,
100-point movement, which is doesn't even equal 1%, right? It's all just noise. There's such a difference between signal and noise, right?
Well, and
signal is action, and noise is just all the chattering, media class that you hear, where it's their job to foment breaking news and foment breaking markets and foment this move and that move. Like Nick Carter did a good job of making fun of somebody that, again, tried to connect to
we're praising people who make fun of people now.
And it should have been like, he did a really great job, because somebody put the points in the Dow that have dropped, Trump this, Trump that, or whatever, and he's like, this is embarrassing, you should delete this. Actual point totals and using the Dow is a disgrace. I mean, the Dow is a borderline irrelevant index at this point. The S&P and the NASDAQ are what matters. And then at the same time, you don't use point totals, because over time, the Dow is at 40,000 or whatever. You
not relative.
Yeah, you use percentages, right? Yes. So, but again, what's the percentage of 15.5 to where we are now at 15.4 or 6 or whatever it happens to be?
Exactly.
A 115-point movement on a 15,000 number. That's what is that? 1%?
Not even
1%.
What's that movie, Andrew, where it's the apocalypse and they're driving all the vehicles across the desert and it's that crazy? You know which one I'm talking about?
You got to give me
this is that beginning scene where all the people are in the canyon and they're all just dying of thirst, and they open up that pipe that just sends the water out and it just saves everybody. Oh God! Okay, where did you get that? First of all, you just ruined
Mad Max. It's Mad Max.
It's Mad Max. It's Mad Max. That's exactly what it is. So here's the thing: he's just drying us out a little bit, and then the water spigots are gonna turn on, and we're gonna be floating in cash. $5 trillion. That it has. People aren't going to stick it under their mattresses anymore. It's going somewhere. It's being spent.
The problem is exactly what Andrew was, pointing to just a minute ago, was that there's a difference between signal and noise, and retail is all about noise. They're all about social media. They're all about the nonsense that's being spewed by people that maybe have large accounts, but don't know as my dad would say, don't know their ass from the hole, their elbow from the hole in the ground.
Well, they know their elbow from a hole in the ground as it pertains to getting eyeballs on their tweets, but that's about exactly it. That's all that they know.
Listen,
Andrew knows a lot about that.
I can get a good look at a butcher if I put my head up there.
Explain that further to us.
Take my word for it.
I have no clue what just happened there.
Andrew, tell us about how you use nonsense to get a lot of views. Tell us now. Explain this.
So here's the nonsense. So that's kind of the point, right? So how does media nonsense turn into, signal versus noise, right? So noise makes people do things that they otherwise would not do. I mean, we have somebody that we work with that, sold their entire Bitcoin stack at the lows, right? 74, 75. They just panic sold like 14 right in that moment. Why? Because they're listening to the noise, right? Yeah. They're listening to the noise. They lost sight of the signal. And they rid themselves of 14 Bitcoin. Now, maybe they bought it back, but just a terrible idea. And so if you're caught up in the
way
noise,
to rub their nose in it, by the way, that's
if you're caught up in the noise, okay, if you're caught up in the noise, which again, even I fall prey to, but I do my best to kind of pull back and say, you know what, it's Sunday, the futures are open, volumes are literally as low as they'll ever be. So any sort of movement at all is going to be amplified. Yeah. So yeah, you could be down 5.5% on, and everybody's talking about, the triggers are going to kick in and the they're going to pause the market for 15 minutes and we should be prepared for that. None of that even came remotely close to happening. Even remotely close to happening.
But they said that about August 5th too.
Oh my gosh. So again, we find ourselves in a spot where the NASDAQ is less than 1% movement from Friday. Everybody was just up in arms and, hell is coming, Black Monday. I don't know. I'm sort of enjoying this, market destroying process that we're in that puts us down a net 1% over the past, few days. I mean, okay.
Well, listen, anything that goes down really quickly bounces up really quickly, and anything that goes up really quickly falls down really quickly. When you know what nature looks like, when you're in a jet show, an airplane, jet show, and the jet, one of his best moves, the fighter jets, they go straight up in the air and they turn on their afterburners and they're just screeching at a 90-degree angle to the earth. I mean, just straight up. Well, guess what? That's of importance to us. We see that as human beings as defying nature, defying something. It's defying gravity. We know that's hard. So when you see these types of volatility, actions in the market, and the only thing that you can put your, arms around from a material evidence of why it's happening perspective is headlines. Yeah, I wouldn't take too much account for the headlines, and I would try to play the bounce or play the primary. But volatility gives you opportunity. Period.
Yeah, exactly. And so here's the thing, people that are really interested in Bitcoin and, what's going on with it right now. Well, the 7-day average for open interest is pretty negative right now. And so, that tracks the chain. That's a metric there that's done. I don't even know who does it. I think, maybe Crypto Quant, I think is maybe where it is, that you can find it pretty easily. But the 7-day change is negative. And what that really kind of means is that these derivatives, the people that are holding derivatives are basically either closing up their positions or, somehow maybe they're getting liquidated or whatnot. And usually what this means is it's a good buying opportunity. Now, that doesn't mean it nails the exact bottom or it can't go down a little bit lower. But generally speaking, when you're seeing this with open interest and you're seeing that over that 7-day change has gotten pretty negative, I would definitely be much more interested in watching for a reason to go long than watching for a reason to go short. Because I think there's a good chance that if it's going to go short, it may just be a sweep of the low. Everybody's looking way down low. We rarely get way down low. It doesn't mean it can't, but, again, when we're in the markets, when we're looking at that, we don't want to trade or invest based on, possibilities. We want to look more at probabilities, because probabilities give you a bit more of an edge, right? So when I'm seeing this stuff, I'm definitely, more interested in looking for a reason to go long than looking for a reason to go short. Doesn't mean it can't go down a bit more. And we've got targets to the downside if we do, but I'm not looking to be a seller. I'm not looking to short Bitcoin down. I'm looking to find a reason to buy it.
This volatility is not driven by retail right now.
Right.
Like absolutely not driven by retail. It's institutional. It's hedge fund focused. That's what it's being driven by, is different unwinding of different trades. And so, again, I looked at the S&P is down something like 60 points since Friday at 3 p.m. Right? Again, like 1.2% in total. So, if people in context look at a Black Monday, I mean, that was nearly a 30% drop in one day. One day, folks.
Yeah.
There's a reason why
Hey,
it's
tell them what
called.
you're referring to.
So in 1987, there was a Monday, and it turned into Black Monday because on one day in 1987, by the way, it's fairly captured in the movie Wolf of Wall Street. It's his first day on the job at whatever brokerage firm he signed up to go at, and Matthew McConaughey plays a critical role in this scene. And they're on the phones doing their thing, and they're seeing the markets go down and go down and go down, and then they turn the market off, okay, because it had gone down so much. And because of Black Monday, there was a litany of adjustments to the way that they allow markets to work. Circuit breakers were instituted so that, if the market's down 10% or 15% or numbers like that, circuit breakers happen where the market does have limits to it for a period of time to slow down that move to the downside. But that didn't exist in 1987. And, we were at nearly the 30% number in one day, which was extraordinary. But again, whether it was the oil embargo in 73, Black Monday in 1987, dot-com crash in 01, which, by the way, coincided to some degree, leaked into 9/11. And then, the great financial crisis, all of those in some way, shape, or form were extraordinary buying opportunities. But some of them were more extended than others. The oil embargo turned into the 70s, where the markets did basically nothing for nearly a decade. 1987, there were huge swings back to the upside over the next 2 or 3 years. Dot-com crash was very, very difficult if you were highly invested in tech, because the likes of Priceline and eBay and PayPal and Amazon even went down 90%. It felt like a pump.fun coin, literally.
We're going to go to an analogy now, okay?
There it comes.
Bitcoin and stocks, but we're going to take Bitcoin right now, is like a stadium, okay? And each seat in the stadium, there's 21 million seats available, okay? And you can buy as many seats as you want. And there's sometimes where people are leaving the stadium and more than they are coming into the stadium. And sometimes there's more people going into the stadium and there's a shortage of seats and the price starts to escalate. You want to buy seats when there's more people leaving the stadium than there are going in.
Yeah.
And you also want to look around while you're in the stadium and notice who's keeping their seats, who's buying more seats. And I went from having a riffraff sitting next to me like Andrew to now Larry Fink is holding a whole suite, a box right above me in the stadium. And there's more corporations that are in the boxes in the stadium, and they're not leaving the stadium. So why wouldn't the price dropping be a good time to acquire some more seats in the stadium, since the stadium's never going to have more than 21 million seats? So if you like what's going on in the stadium and you see all the good companies buying the boxes for big tickets, and you see a rush of people in one section, section 103, I don't know what happened, but 15 people just stood up out of their seats and they're leaving the stadium. Those are the people. That's when you start buying those peoples. You don't care why they're leaving the stadium. Maybe they have an emergency that they have to liquidate their position. Maybe they were leveraged on the tickets and they didn't really own them and the bank's repossessing. All sorts of reasons. But just notice, when price is falling, that's when more people are leaving the stadium than are going into the stadium. That's when you buy tickets.
And as we often, kind of point out, the market is the only place where people aren't buying things that are on sale. We'll go to the store, something's 5% off. Oh, hot damn, I got to buy it, right? You come here, it's 20% off, and you're like, I'm not going to buy it.
Well, because fear of the unknown drives us into making irrational decisions. When you see Section 103 leaving, you start questioning whether they know something you don't know. And you start going, oh crap, maybe I should be, I've got 15 season tickets over here. Maybe I should be at 10. You know, if they're right and I'm wrong, I need to it's just fear and greed at its simplest form. But the stadium's never going to have more than 21 million seats. You should be a proud owner of every seat you can get your hands on, and you should hold that as long as you see the boxes getting filled up with big corporations, because they are. You can't go buy those boxes right now. There's competing interests. There's people out there paying billions of dollars a month to buy Bitcoin at that level. I mean, just huge amounts, like MicroStrategy or now Strategy.
Yeah, and here's the thing, you know, I don't think a lot of retail traders realize it, but what they end up finding out if they pay attention, you know, after some time is they're often trying to sell the tops and buy the bottoms, but the most often the result they get is that they end up selling at the low or lower down area, right? And then they're buying higher up and they're gapping up, which means they consistently have to add money to get back in beyond where they were. And so, you know, a lot of this has to do because, you know, most of retail comes in, they really don't understand how and why markets move the way they do. They really don't understand a lot of the things that we're talking about from a lived through experience, right? I mean, the thing that we have that a lot of market participants don't is we've been through multiple market cycles through multiple asset classes. And so we've been there, you know, frontline. We've got to see that everything happens the same way, right? You get whether it's crypto, whether it's stocks, whether it's you know, some currency or whatever. I mean, it's the same thing. It's the same way. The same people act the same way in them. It's just repetition. And so I think that's a big, you know, for new traders that come in and new investors that come in, I think that's one of probably the biggest things they have going against them is that they don't have that experience having gone through that multiple times in multiple markets.
Well, they've been taught
that it's just the same thing.
They've been taught bad rules, in my opinion.
Yeah.
A lot of people like BG. No, I don't know what you mean by this. Don't mean to point you out if you meant something different, but says the 50-day moving average on the weekly is a bear market indicator. I would agree. I think, especially if the 50-day moving average breaks, and you know we fall, but what does that presuppose? It presupposes that you should you buy in bear markets.
Mm-hmm. Correct.
You don't sell in bear markets. You buy in bear markets. So as price starts to plummet, the most prudent thing, in my opinion, to do is to, like you said, hedge your bet. You buy into that selling pressure. You're getting great fill prices. And if it does turn up, you're in a great position. You bought the bottom. If it continues to go down, as long as you're managing your cash effectively, you're going to continue to buy into the bottom, and hopefully you'll buy into the rounding bottom, and you'll have a pretty good weighted average down there, damn near close to the bottom of the trough. But the point is like most people who say, "Oh, something is bearish," immediately think about selling.
Yeah. Yeah, yeah, it's all the negative, right?
That's exactly right. It's like, oh crap, something's happening that's driving the price down, and somehow in human nature, we've equated that to we should be selling. That's, in my opinion, it should be the exact opposite equation, right? And we should be training ourselves when it's euphoric, when everyone's saying that we're geniuses and we've made disproportionate money based upon the time period that we've had exposure to. Like, you know, if you would be a genius if you sold all your Bitcoin at 109 and bought it all back now, like a genius, you know what I mean? That's a huge move. But you know, you're going to gamble on that, or are you going to take a more prudent approach and you know, sell into the pump so that you have a blended, you know, exit price of maybe 101 or 102? That there's nothing to be ashamed of. You still made the huge lick, and you didn't have all the risk of picking the top.
Yeah, exactly. But you know, again, that goes back to the whole, you know, human nature. we want to buy, we want to buy the absolute lowest price. We want to sell the absolute highest price. And, as I continue to say, those are just events,
Well, and to
tops and
be
bottoms are ranges. They're things that happen. And if, like you're saying, if you're buying within that, in that low range, or you're selling within that high range, then you're doing it right. If you're trying to pick that absolute highest point at the top of the bottom from somebody that's been doing this for 30 plus years now, going on 31 years, I'm going to tell you what, and it's going to sting when I say this, but you're an idiot. I used to be an idiot. When I first started, I did the same thing. You can't do that.
Well, BG said I'm stacking altcoins. I don't disagree with that. A lot of altcoins are down 95%. That sounds like a hell of a deal to me. So they may not come back, but where else are you going to get that risk reward ratio? You know what I mean? When something has gotten its, like, I don't think Pepe coin, we'll use that as a reference because that's his emoji or his profile pic. But I don't think Pepe is going anywhere, man. I think they have a pretty solid community. That thing is billions in market cap. I don't think it's, it may go down a little bit, but I don't think it's just going to disappear off the face of the earth. So if something that I don't think is going to disappear off the face of the earth is down 98%, that sounds like, sounds like a buy to me.
So you're saying buy Pepe?
No, I'm not saying that because I don't even know where Pepe is on the price. But I am saying that, like, I don't think it takes a rocket scientist to buy something that's down 95%. And if you buy enough of a sampling of those, then you're going to hit some, right? There are going to be some that return to glory. Trump coin would be a good example of that. I don't know what the heck Trump's going to do over the next 3.5 years, but there's probably a pretty good likelihood that thing goes on another pump, right? And so, if it's now the dog of the show and everybody hates it and no one likes it, that sounds like, again, it's risky, but it sounds like a lot better than buying into the top and buying into the pump.
Yeah, out there start pulling back.
Well, again, a reminder,
launched, right?
a reminder of how impotent this current move in the markets is. The dot-com bubble crash, Amazon went from 106 down to $8.37. Okay, 106 to $8.30 during the Great Financial Crisis. The price of Chrysler stock went from 160 to 0.
Yeah.
The price of Bank of America went from up in the 70s down to $2.27.
That was the one I was waiting for.
The price of one of the biggest regional banks in the country, Fifth Third Bank, went from in the 70s down to 97 cents. Fifth Third Bank was trading under $1 during the Great Financial Crisis. Extraordinary, right? We are nowhere near any of that right now. No. Nvidia's back above 100, right? Yeah. MicroStrategy's back up above 250. We are Nvidia would have to go to $8 to match what happened to Amazon, which is one of the 5 largest companies on the planet now. Again, the irrationality of 5 or 10% moves in the markets is extraordinary. It's just a microcosm of the difference between fear and greed. And that fear is an emotion that is several exponent levels above greed. And Tillman made a great analogy. He's like, wait a minute, we're in a stadium, but people in section 130 are leaving. So what do they know that I don't know, right? Maybe I should leave too because there's a storm coming or there's blockages in the parking lot or I don't know what, but they're leaving. So maybe I should leave, right? One of my favorite comedy movie shows was Kings of Comedy back in like 1999. And Cedric the Entertainer did a bit where he's like, people just start running and they don't ask questions about why they're running. They see people running like, wait a minute. Uncle Steve's running. I'm running. What's running? What are we running from? Everybody's running, but 90% of people don't know what they're even running from. They're just
Yeah.
other people are running, so I'm running.
Yeah.
So same concept. And again, we're down 1.2% on
Well,
the
listen, I've been in the markets for over a decade in Bitcoin, and I've been subject to the most brutal wipeouts that you can imagine. And even I read headlines that elicit emotional responses from me. I remember the day that Saylor went and met with Microsoft. Remember when he pitched to the board like that, they should add some. And I'm sitting there thinking from an outsider, like, this is a no-brainer. They're sitting on more cash than they know what to do with. Like, they're losing, and they're going to at least dip their toe in it. He walked away from that meeting skunked. They said, "Screw you. This is a stupid idea, and we're not adding
Yeah, right.
anything to our balance sheet as it relates to Bitcoin." When I read that, I thought to myself, "Golly, man, what are they like? Did I miss something here?" It's micro, so it's just human nature. Like we're just bombarded with noise all the time, this
all the time.
congestion,
Yeah.
and it's really, really hard not to fall for it. Like incredibly hard.
Yeah, we got a comment here, Scott saying, "What I don't understand is this impression that the U.S. has just been a victim of all these other countries, like we haven't been a willing participant in global trade." And I don't think that's the correct take on that. I think it's just this realization that we have been doing what we've been doing, and it's gotten out of hand and it's gotten stupid, and we really need to stop what we've been doing and right the ship. I think that's more.
We're the bank of the world. We're the economy that is leaned on for the world. We're the protector of the world. We send billions, hundreds of billions of dollars all over the world for God knows what reason. We've been doing this for decades, literally for decades. And so trade imbalances are massive. Tariffs, France and Canada charges 200% tariffs on certain things that we send their way. 70% tariffs, 80% tariffs, 50% tariffs. So, again, there's a big portion of people out there that are upset with tariffs that have no idea what they're talking about, don't have any idea that we're simply just trying to put some balance in order associated with tariffs, because everybody charges our stuff for tariffs. Why? And it's smart on behalf of the other countries, because everybody wants American goods. Everybody wants stuff that comes out of America. Everybody wants it. And people are willing to pay significantly above what we pay to be seen with American luxury goods, because that means something in their society, right? So they can do it. And people that have the means will buy those products at elevated prices. This is just a balancing of all of that.
I mean, all you have to do is look back during the Cold War. I mean, I remember during the Cold War when things like Levi's and whatnot were these goods that, that they weren't able to really get, like in Russia and other places like that. And yet they were, the demand was so great for that kind of that American this and that they were smuggling in. There was a black market for it. I mean, and so, when we really kind of move it out, the whole idea of tariffs or whatever, it's the same idea on there.
Yeah, we're really close, by the way. We're really close, by the way. If the market keeps moving the way that it's moving today, we're basically going to be at a net zero from Friday afternoon of last week.
But then what are we going to complain about?
We'll find something. I mean, there'll be something new. It's strange that crypto Twitter have been virologists. They've been bankers. They've been tariff experts. They've been currency experts. They've been geopolitical experts, war experts. It's really extraordinary. You've got really sharp, really, really sharp people in the space.
I think one of the biggest divisions that I'm analyzing right now is inside the crypto community as it pertains to the future of Ethereum. I, in my gut, in my soul, have felt like this cycle is the cycle where Bitcoin dominance goes to all-time highs, and that Ethereum really falls to some of its competitors like Solana. And I think the meme coin push through Solana proved a lot of that. But there's still a lot of people inside the crypto community that are beating this drum that it's going to catch up to Bitcoin in this cycle, that it's going to have this, massive pump up to $10,000. I think there's money to be made in that conversation, because you look at what's happened in the crypto space over the last, week and a half, 2 weeks. Ethereum's gotten hurt worse than anybody. We're at 2017 and below levels. We're in the
Yeah.
sub $1,500 mark. I mean, that is so long ago. The question is if it does recover, this would be a genius time to load the boat.
Yeah.
But if it ain't going to recover, this would be a genius time to short the piss out of it. And therein lies the fun nature of where Ethereum stands.
Well,
I don't have an answer for you guys. I just think it's really
the
interesting. I'm paying attention
yeah
to it.
the folks with .eth in their their crypto Twitter name have had a rough half decade. It's been fairly tough sledding, and you're right. Solana being the blockchain of choice associated with transactions over the past 18 months have put a serious dent. But Ethereum was ripe to be taken out of that position because of the fees associated with it, the gas fees, which were just outrageous.
That's really stupid.
And they didn't do anything to fix it. So one has to ask the question, over the next 2 to 3 years, what is the value proposition associated with Ethereum as from a use case standpoint? It effectively doesn't exist. And you can make the case that the likes of BlackRock, which are using different chains in their BUIDL portfolio, Aptos, Avalanche, Polygon, and a couple others, they don't have Ethereum in that portfolio. I think they added Solana to that portfolio actually a couple months ago. I think I saw that headline. So if they've left it out, where do we go from here? Is there some sort of return to we want to pay more for transactions in the crypto space? I doubt it. It's not happening.
Well, and if this whole RWA thing is really the next wave of material development in the space, you're going to have an incredibly reliable chain that's cheap. And Ethereum's not cheap. Solana's not reliable. And to be honest with you, this is the best alpha I can give you is, Andrew, I don't know if you remember this, but like 3 years ago when we were talking about moving chains off Liquid, we did a very deep, very expensive deep dive
Avalanche,
into Avalanche was the clear winner. I mean, it was like it was leaps and bounds ahead of what the other ones we assessed. And so, maybe this pump is going to be the reshuffling of the alts based upon true utility. And that is the precedence that Bitcoin is setting, essentially by the world acknowledging it as a hedge against inflation. That is its true utility. So maybe we're heading into this age where utility is finally going to rule the day, and everything else that just has noise and pump is going to be looked at as kind of like a meme coin. What's there? What am I betting on?
Agreed. Yeah.
What portfolio is that Mark was asking?
The BUIDL portfolio. So BlackRock BUIDL, BUIDL. It's an internal institution only portfolio that they have that's gone from 500 million to almost 1.2 billion over the past 3 months. And by the way, prices in that portfolio have not doubled in price. They've gone the opposite direction, meaning that the assets inside that portfolio have grown significantly. So there's real interest in investment in that space. So again, the fact that Ethereum has been left out is really something.
Last thing we can talk about, did you guys see the acquisition that Ripple made? Of the traditional exchange?
No, I missed that.
Yeah, so Ripple made like a $1.5 billion acquisition of an exchange that their intention is to bring. They're saying it's the first time it's ever been done. I would disagree because I know for a fact it's not. But TradeStation used to have this functionality where you could trade crypto on TradeStation and you could trade traditional, and you could remove the crypto from TradeStation through cold storage. They changed that because during the last administration, I think they were getting a lot of heat. But that's probably on the horizon for a lot of exchanges. It's going to be really interesting to have the ability to go seamlessly between traditional finance and crypto, all underneath the same mantle. It's probably the best idea I've heard come out of the Ripple camp for a while. I didn't think too much of their stablecoin announcement, but
That's what you're going to be speaking about at the XRP thing, huh?
listen, I have
That
a lot.
Andrew
I have
mentioned
me and XRP dated for a long time. I've got a lot of good history with XRP. She broke my heart, but that's a story for another day.
And looks like Andrew's going to end the show with the really wacky hat here, ready to do his thing.
You're on mute.
You're muted.
Is this a subtle way? I can't tell whether you're in support of Ukraine or in defiance of Ukraine with this hat.
I mean, if I could get up and do the Russian dance with the leg kick, you know what I mean? I would.
Oh, you could. I mean, I don't know what's stopping you.
The room's too small. I can't pull it off. I can't pull it off. This hat, oddly, this hat makes me want to eat a block of cheese. I don't know why.
Yeah, that's good. Go for it. You probably have a calcium deficiency or something. Your body's talking to you.
Probably have more than a calcium deficiency.
Oh man, so that's gonna be it, guys. I appreciate y'all as always, man. We have so much fun doing this. Thank you everybody for showing up. Don't forget, enter for your chance to win industry passes there from Arch Public, guys. Go over to their site, archpublic.com. Download their Bitcoin algorithm, which is free. Download that, and then go follow them on Twitter, on X there at TryArchPublic. And you've got until 5 p.m. Eastern today. Is that what you guys said?
That's right. That's correct. 5
p.m. Eastern today to get it done, guys. So that gives you about 3 hours and 55 minutes to get your rear end in gear and get those. Those are pretty amazing passes. It's all 3 days. Really get you standing. I'm still trying to see if I can make it to Bitcoin to the conference this year. I'm trying.
What is there to try? It's you buy a plane ticket and you show up. You have a ticket, and we'll get you in the door. Listen, Arch is doing so much stuff there. We're gonna have a lot of fun. You got to come. It's gonna be a good time.
I'm gonna try. Like I said, I've got just with everything that I've got going on, trying to make sure that everything's covered so I can is the real big issue. But I'm working on it. I'll let you guys know if I can jump.
Well, there's Secretary of Treasury is going to be there. He was able to get his agenda done and
well, but he gets paid to be there. I'm just
listen.
saying.
Your lawn crew will manage 1 week without you. Yeah. You don't have to be there to supervise.
Look at how quickly he turned it from 3 days into 1 week, folks. He went from 3 to 7
you know why? Because we gotta stick around for the XRP convention on the 30th and the 31st. Okay.
Well, I am really trying to get there. That's actually going to be the mainline novel for my protocol universe, Cold Wallet Protocol. That's actually going to launch on May 27th. So that's why I'm trying to make it there for that. So we'll see. We'll see if we can do it.
Awesome.
All right. Anyway, here.
In the series 2 of your fiction book, incorporate the Bitcoin conference being someone's alibi against the murder or something like that. You need to throw that in there somehow.
If I do, you're not getting royalties. I'm just saying.
What you better there better be a character in the book named like Philman or something like that. Really, where it's an obvious compliment. Like this guy is awesome. Listen. Yeti has actually emailed me during this podcast and not offered sponsorship, but cease and desist. They've said, have Andrew take the hat off, or we will be filing charges for defamation because this is just god awful.
There it is. All right, guys. I've had enough of this. Hey, listen, as always, remember the only thing you control is how much you lose. So keep working on that risk management. Please head on over there to Arch Public, guys. Download their Bitcoin algorithm there. Follow them. Try Arch Public. Follow Tillman and Andrew both at AP_abacus and at Texas OL61. Follow me, TX West Capital. And hey, check out forknations.com, guys.
Careful when you say that name. Careful.
Hey,
Listen, and by the way,
there.
just to remember, there was all that hubbub about Fort Knox, and we didn't get our answers. I'm not forgetting that. We're going to continue to.
I bet you Chris can't say Fork Nations 10 times.
You can't say it four. What are you talking about?
No chance.
Just got to say it once. That's it. All right. Hey, thanks a lot for joining in, guys. Hey, I'll be back on Friday, everybody. The break it down there for the markets on Friday, same time, same channels here and everything. I think Fibbo's with me this week. I'll have to make sure and check on that. But hopefully you guys will be there. Otherwise, y'all have a great week. Trade safe. Have fun. Touch grass. All that other stuff that the kids say today. And we'll see y'all later. Take care, everybody.
See y'all.